Welcome to the jungle, ladies and gentlemen. Actually, welcome to Investopedia's webinar series. I'm Caleb Silver, the editor-in-chief. Delighted you're with us. I'm really excited for today's conversation with my friend Dan Simon, CEO of Vested, and also the author of The Money Hackers. And it's really good to have you here, Dan. Tell us a little bit about you. Show us that beautiful book, crushing it on Amazon right now, The Money Hackers. This is going to be a great conversation about fintech, about where we are, where we've come from, where we're headed. It is such an interesting time in financial services for obvious reasons. This book probably couldn't have come at a better time. So I'm really delighted to have you here. Dan, welcome. And tell us a little bit about you and what brought you to write this book.
Well, first, thanks for having me. And thanks everyone for joining us. I hope everyone is safe and well and healthy wherever you are. So I'm Dan Simon. I go by Daniel P. Simon if you're looking for me to buy the book. I am an author, a writer, a communications guy, a speech writer by training, an unlikely Wall Street dude. I've been on Wall Street for about 20 years. I speech writer for people like Peter Grab, who also wrote forward for the book. People like Mary Shapiro, who's the former head of the SEC. And I've had this sort of front row seat side of the banks for going on 20 years now. Actually, I'm really a literature major. I was told there'd be no math on the test, but I wound up in Wall Street anyway.
Well, you and me both. I'm a former restaurant guy who wound up as the editor-in-chief of a investing in finance site. So we're misfits, which makes us perfect for this conversation. Well, I'm really excited to get into this with you. I'm going to share a screen with folks, if I haven't already. And you see that full screen, Dan? You see our presentation?
Yep.
All right, let me roll back to the beginning, which I should have done from the top, showing you guys the end before the beginning. But again, welcome to the Foundations and Future of FinTech. Again, I'm Caleb Silver, the editor-in-chief of Investopedia. Delighted to be joined by Dan Simon, the CEO of Vested, and also the author of The Money Hackers, which we're going to be talking about today. Dan, you just gave a great intro how you got here. Let's talk about the book. The Money Hackers. What brought you to write the book? When did you start? And what was sort of the process for gathering all this information about these great pioneers in the industry?
So you used the word misfit. You said we're misfits, and I think that's right. The subtitle for the book is how a group of misfits took on Wall Street and changed finance forever. I'm a misfit myself. As you can tell from my thick Bronx accent, I'm not from around here originally, but I've spent more time in America than anywhere else. I'm an English and French literature grad who dedicated his life to finance. So I'm a misfit, and I was drawn to, when you look at what's been going on in the way that technology has transformed our money in the last 10 years or so, the people behind that are themselves a range of weirdos like us and misfits and fascinating individuals who don't look like your grandfather's banker. So I kind of had this idea for this book as a sort of follow-up in my head. Michael Short was about the people who saw everything coming in the run-up to 2008. This was what happens after the crisis and who are the individuals behind what's happened in our financial lives over the last 10 or 12 years. And I got talking to HarperCollins, who's the publisher, and they said that would make a great mass market book. And it seemed to fit very well with my, my feelings about money. I certainly struggle. I have a weird disconnect professionally. I tell stories about money for a living. Personally, and I think many people do, they struggled with the traditional financial system, the traditional financial services industry. Hasn't felt like it was made for them. And this is about a group of people who sought to change the way that finance works for people.
Very cool. Dan, your audio comes in and out from time to time, so if you're using an external mic, maybe just go straight through the laptop.
Sure.
But we're getting you most of the time. I just don't want to make sure we miss anything. And folks, feel free to submit your questions, Q&A, through the Zoom platform. We'll get to as many of them as we can towards the end here. So let's make sure we're good on the audio. Again, we're talking about the FinTech ecosystem, right? This is across the entire financial services arena, whether it's robo-advisors or insurance tech, payments and remittances, which I know your book focuses a lot on, since those were a lot of the pioneers in this, the blockchain and Bitcoin, fintech companies that have exploded onto the scene in the last 4 or 5 years. I know you know that segment well. This is an enormous ecosystem that just gets bigger every year. And the amount of money, venture capital money, private equity money, public money going into these markets is quite incredible. I know your book focuses on folks across these systems, across all this entire ecosystem, but let's talk about some of the folks that you profile and their contribution. So let's get into Ismail Ahmed, who is a key figure in the early days of money remittance. So Dan, we don't hear you at all, so give us back. Whatever you were doing, we'll take it back. Lost your audio there completely. So I'm gonna have to go back and put on some more Axl Rose unless I start hearing from you. Whatever you had going, let's get that going again.
Is this working now?
That's working. All right.
Okay, let's do that. All right.
All right. We were talking about Ismail.
I heard
Ahmed.
your question about Ismail Ahmed. So Ismail is sort of characteristic of so many people in this book, in as much as the people who've been behind the fintech innovation are really actually kind of amazing people. And Ismail is like a prime example of that, like truth is stranger than fiction category. So the guy was born in Somalia and grew up and was in the middle of the Somali Civil War in 1986 when he got a scholarship to go and study at the London School, University of London originally, then London School of Economics. And he narrowly survived being killed in the Somali Civil War by hiding in the wheel bed of a truck. Finally made it to Addis Ababa, where his brother, who also survived, sent him some money. That was his first experience of remittances, of money being sent across borders. Basically hitchhikes his way to England, takes a job working nights around his schooling, and starts to send money home to his family. And that was his second experience. He starts to see how places like Western Union take huge chunks of immigrants' money to send it across borders, and committed his life, and that's what he studied, the world of remittances, about how to make it easier for immigrants to send money back home and across borders. And he eventually he rises to become the head of the UN remittance program. But that's not where his crazy story ends. He uncovers an accounting and financial fraud inside the UN, becomes a whistleblower, gets fired by the UN, sues the UN in court, and then wins, and then uses that money to start this company called World Remit, which makes it much cheaper for immigrants to send money across borders. So if there's one person that I focus on in this book whose life story I want to go and sell as the rights to a movie, it's Ismail Ahmed.
What an incredible personal story. And it's great how you see these people take their personal experiences of struggle and turn them into these entrepreneurial opportunities. That pattern you see across a lot of different characters in the book. And certainly he was a pioneer. And in the US, we don't focus so much on remittances unless we have relatives living in other countries. But outside the US, it is everything, right?
Yeah,
remittances and sending money around.
It's half their GDP. For certain countries or certain states, there's a particular state in India called Kerala, where remittances, a lot of the people from Kerala go and work in the UAE and those states. If you've ever been to Saudi Arabia or UAE, you know, many of the people cleaning your hotel or doing service industry will be Indian immigrants from the state of Kerala. And so remittances actually is a significant portion of their GDP. And, you know, when you have a Western Union or a MoneyGram and they're taxing a big chunk of that, it really is just rent seeking.
Sure. Let's talk about Blythe Masters, a total legend. She's the former head of JP Morgan Global Commodities. She started Digital Asset Holdings, the blockchain startup. And now she's a partner in Motive Partners that is funding fintech company. Complete legend on Wall Street for those that know her or know what she's done. Give us a little bit on the profile of Blythe and why she's so important in this movement.
Yeah, I mean, Blythe is a sort of, you know, each one of these people are interesting and unique in their own way. And she's someone who is unlike some of the fintech players that she did grow up in Wall Street. In fact, she's the sort of archetypal. She was the darling of Wall Street. She was one of the youngest managing director at JP Morgan. She was part of what's called the Morgan Mafia that created the credit derivative. And then, you know, she wound up being the sort of the poster child for what Warren Buffett called the weapons of financial mass destruction in 2008, because that credit derivative, the credit default swap, was what was being used to create these sort of complex and arcane asset class constructions that, you know, led to mortgage-backed securities and led to, you know, much of what we saw as the financial crisis. So in many ways, she's sort of, you know, a true Wall Streeter. She rose to become the CFO of JP Morgan's investment bank. On the other side, she never really fit in, partly because she's a woman. And you can't underestimate the sort of the gender bias in finance. You know, certainly up into the last few years, it's getting a lot better. JP Morgan, by the way, just has 2 successive female CFOs, the first financial institution in history to do that. So things have certainly changed, but you got to cast your mind back to the 80s and 90s. She is an outsider and a misfit by virtue of her gender. What's especially interesting about Blythe is, you know, having been the sort of the pioneer inside banking and kind of the poster child for kind of institutional banking, she then goes and becomes the CEO of something called Digital Asset Holdings, which was the first real true blockchain company inside financial services. And if you know anything about blockchain, you know that it was started with a mission to sort of decentralize or kind of cut out the middlemen. Banks and exchanges are kind of the ultimate middlemen in financial services, and blockchain was established to essentially do away with them. When you look at the Satoshi Nakamoto white paper of 2008 that created Bitcoin, that postulated Bitcoin, postulated blockchain, it was in an effort to really say, look, the banks have screwed everything up. We need a better decentralized, non-central system. And so for Blythe, who had been at the heart of finance and then the poster child for everything that went wrong with finance, to then go and work heading up a blockchain company, really, for those of us in this world, you can't really overestimate how impactful that was, and how credentializing that was for blockchain and Bitcoin.
That makes her a perfect character for the money hackers. Again, we're talking to Dan Simon, author of The Money Hackers, how a group of misfits took on Wall Street and changed finance forever. And Steve Streit, another player in this, he's the founder of Green Dot Corporation, right? This is the prepaid reloadable debit cards. Talk about cutting out the middleman and going right to where the consumers are, especially those low to middle income consumers that probably use this service the most. How important was what he developed for this ecosystem?
Super important. And I'll just spend a second talking about his background, because again, it's emblematic of the kinds of people in this book and the kinds of people that have brought us this revolution. They are not your grandfather's or grandmother's banker. Steve's first claim to fame, he was in the music industry, and he invented the category that we call soft rock. So he was an A&R guy, and they were listening to this music, and they were like, well, it's not hard rock and it's not pop. What is it? And he was like, let's call it soft rock. So he's the guy that we can credit for soft rock. He made a lot of money.
He's to blame.
He's to blame. He made a lot of money in music, and what he decided to do with that money was create credit cards for kids. So this is a classic pivot story, classic entrepreneurial story. If you know that Nokia started life in rubber boots, or Slack began as a gaming thing, or Venmo started as a way to tip your favorite band, you know, a lot of great technology has these pivot stories. Green Dot's no different. His initial idea was, you know, I'm going to go make these prepaid credit cards. They'll have like pictures of rad skateboarders on them, and 17-year-old kids will want to go and get a credit card. And it was a complete failure, a spectacular failure. None of these kids wanted to buy a credit card, but someone was buying them. And so he would go and stalk the 7-Elevens and the Walgreens and sort of hang around where the cards are to see who was buying them. And it turned out they were sort of 55-year-old middle-aged African-American gentlemen or Hispanic kind of manual laborers. And what he realized, what he came to see, what we don't always see with our eyes, is that there's an enormous cohort of this country that operates entirely in cash and outside of the traditional banking system. And those people were buying these cards because they wanted a way to swipe for things as things were electronifying, or they wanted to buy things online. They couldn't do that with cash. There is an enormous part of this country that is underbanked or unbanked entirely.
14.1 million people unbanked, according to that.
Absolutely. More Americans own cell phones than they do bank accounts. So what Steve realized, and he pivoted the business, was we're going to scrap the idea of credit cards for kids. We're going to serve this underbanked, and we're going to try and bring them into the traditional financial institutional system, try and create a finance-like experience for this underbanked society. And that's what they've been doing. They have a joke, a bad joke, but a joke nonetheless internally, which is how many underbanked customers does Green Dot have? And the answer is 0, because every one of their customers has a bank, and it's Green Dot. They're actually interesting also because they're one of the very few fintechs that got their own banking license. In fact, they may be the only one. We hear a lot about neobanks, about fintechs like Revolut, N26, Monzo, Chime, but all of those are partnering with small regional banks. Steve Street and Green Dot got their own banking license. So they truly are a bank for the underbanked.
Right. That is not easy, getting that charter and then operating it. So they've gone full service, and it seems to have worked for them. Now, John Stein, a lot of folks may not know the name John Stein, but they probably know Betterment, one of the biggest robo-advisors or digital advice platforms out there. John was early to this game. I met him back in the days when he was still raising money from Bain Capital. And Betterment has become a true player in digital advice with some upwards of $22 billion in assets under management. Tell us a little bit about John, who had a little bit more of a traditional story, coming up through Wall Street and then becoming a disciple of John Bogle and realizing that the game was rigged.
Yeah, I mean, like, he shares many of the things in common with so many of these people, that, you know, the finance should be cheaper, that more people should be able to access it. It should be more democratic. You know, that financial literacy is a shill. Really, what we want to do is make things beautiful and easy to use. And you know, banks, many of the banks and the traditional financial institutions have to be a bit careful because they're my clients, but kind of hid behind engineered complexity. So in many ways, he shares so many of those principles with, you know, with so many of the other people in this book. What I would say about the 22 billion figure that you raise is, you know, to me, the impact of Betterment and John is not the assets under management. 22 billion sounds like a lot of money, maybe to me or to other people, but, you know, anyone that works in finance knows that that's actually a very small amount of money relative to a Vanguard with $1 trillion AUM. Yeah. But the important thing about what John did is the ideas that John unleashed on this industry, right? That, like, you shouldn't have to pay 100 basis points for picking stocks, that your financial advisor should be doing more than just what you could do for yourself. You know, that you shouldn't have to have $25,000 before you can access the growth of the stock market. These are ideas that went viral. And I think his impact, his legacy will be that every bank has a robo-advisor. Every financial institution in the country now says you can invest, you know, if not from $1, then from dollar very small. And it forced the traditional financial industry to kind of perk up and to listen and to change their approach. Right.
And it's, you know, a lot of these companies have not survived. Betterment has survived and thrived. And is really, we had on their head of investing in a recent webinar, and their customers are behaving, and it sounds like that plan is working. Let's get to Margaret. Margaret is from Synchrony Financial, out of the GE world, right?
GE
comes on the scene to run out of the GE Capital world, now the CEO of Synchrony Financial, a key player in the industry, her key contributions, and how has she sort of helped change the stage here?
Well, there's a lot you can say about every one of these, but I'll spotlight one piece of her story that I think is kind of really important. The book talks about 2008 as a tale of two coasts, or a tale of two perspectives, right? In 2008, obviously, I stood outside the Lehman Brothers building and watched the lights go off. So those of us entrenched in finance, 2008 means Bear Stearns, it means Lehman Brothers, it means a crash. But for those on the West Coast, and in the technology world, 2008 meant, you know, Facebook hitting 100 million customers, or the App Store launching on this brand new device called the iPhone. And so it's really a tale of two perspectives, two groups of people looking at the same period of time, one seeing nothing but downside, one seeing nothing but opportunity. And Margaret Keane is one of those rare examples of someone who'd been inside a traditional, very stodgy financial institution, GE Capital, which was very old, by the way. It was started in the 20s, 30s to help people finance dishwashers and so forth. Very, very stodgy financial institution. And she did something that very few people did in 2008 from Wall Street. She got on a plane and she went to the West Coast. And she went to the offices of a development firm called Splunk. And she said her first instinct was to clean it up because it was disgusting. It was full of 20-year-old boys, and it was like a dorm room. And the mother in her was grossed out and wanted to clean it all up. But when she got over that, she saw a bunch of kids developing stuff in a really novel way. She saw approaches like Lean and Scrum and development sprints and things that, you know, her army of technologists back on Wall Street just were not doing. And so what she did is she came back, she picked out some of her best people. She said, you don't worry about maintaining our existing systems. I want you to learn from these guys. I want you to develop something new. And that something new is what became Synchrony Financial.
All right. I love how she takes the learnings from these scrappy startups, tries to bring them to GE, which of course, as you say, couldn't be more white collar, and ends up revolutionizing it. I want to talk a little bit about the timeline here, and I want to make sure we spend a little bit of time on the future, because a lot of these companies were born out of the ruins, the ashes of the financial crisis. Some were kind of being launched within the middle of it. When you look at the Credit Karmas of the world, the LearnVest, which eventually was sold to Northwestern Mutual. But a lot of these companies were born out of that, and they were born out of the fact that we now had a smartphone in our hand and could suddenly look and control, or at least have better control over our finances through our phone. How important was that? And give me the evolution through these periods.
No, you're absolutely right. 2008, you know, John Stein Betterment, which you already talked about, Lending Club, Renaud Laplanche launched Lending Club in 2008, and Credit Karma Ken Lin, which, by the way, just sold to Intuit for $7 billion. So he's done pretty well for himself.
Absolutely.
They actually started on the same day. So Renaud Laplanche and Ken Lin were on, you try and imagine those crappy folding tables that you get at some conferences where you show off your wares. They were at Finovate 2008 on the same, next to each other. So many of these companies were formed in 2008. And I think the reason for that, why do crises create companies? You know, one is the haves see nothing but downside. The banks in 2008 went into complete triage mode. And I also think worse, they learned the wrong lessons. In the run up to 2008, the banks, two things. One, partly as a hangover from pressure of the Clinton administration, they were extending credit to the lower 50% of the market. And the second thing is, if you'd have asked a bank in 2007 to point to their innovation, they would have pointed you in their capital markets. That's the Blythe Masters side of the house, right? Look at these incredible, look at how we're using computers to create algorithmic trading. Look at these clever constructions that we're making, right? So 2008 comes along and they said, okay, two lessons. One is extending credit to the market is bad. The mass market represents nothing but danger. Two, innovation is bad. We're being punished for innovating. We need to stick to our knitting. What we do really well is we hold people's money and we lend it out for short term, and then we give you some of the interest. That's what we do the best. Yeah. And that happened to coincide at the exact moment that a bunch of technologists just went, wait a second, Facebook just launched, you know, Apple just launched the iPhone. And what's more, the mass market represents massive opportunity. The dream of Web 1.0, of ubiquity first, revenue later, which crashed and burned with pets.com in 2000, 2001, was starting to actually manifest in 2008. Amazon was rolling in gobs of money. Google was making gobs of money. Facebook was making gobs of money. So they looked at the world and they said, hang on, you can really start making big money at scale by offering services to the lower 50%. So banks and tech people looked at the world completely differently at that moment. And what happened is that banks retrenched, and that vacuum that they left was filled up by the money hackers, by these entrepreneurs and innovators.
The explosion, the ubiquity of communication, ubiquity of information, turning into all of a sudden this opportunity to bring financial services in through technology into one's personal space.
Well,
Really, it
and
was a game changer.
yeah, and the App Store was crucial to that, because what did the App Store do is that it unbundles things. Apps do one thing really, really well. Who are the ultimate bundlers? Banks. You go to a bank branch, they bundle all. You get your rent, you get your mortgage, you get your loans, you get your interest, you get everything inside a bank. You know, the technologists saw that the App Store was going to create a great unbundling of services. And that's exactly what happened. You get one app for your lending, one app for your savings, one app for your investments.
And now it seems like we're moving into the world of the platform where the big banks are now offering all these services, right? It is the world of the platform. So whether if I'm a customer of JP Morgan Chase, I can have my brokerage account, I can have my bank account, I can have my home loan, I can have my my college kids loan. I can have it all on the platform and actually look at it all on the same device. So I want to make sure we spend a couple minutes pitching forward, given the crisis that we're in right now.
The next 10 years will be defined by the rebundling, not the unbundling.
Back to the platform,
Correct.
massive institutions, the Schwab acquisition of TDA, the
Yes.
Goldman acquisition of E-Trade.
Yeah, the bank is going to be rebundled and rebuilt. It's just going to be built on a technology platform and not a bank branch.
Right. What has the coronavirus, this pandemic, and this shelter at home dynamic taught us about what we need now as consumers, as financial consumers, that could be a future offering? What do you think is coming on the horizon, or what are you reading out there that may just put a finger on where we're headed?
So a couple of things. I mean, obviously there's a lot of tension right now as far as fintech is concerned. On the one hand, you know, digital adoption is going through the roof. Look at something like Zoom, which I think we're on now. We're on Zoom, right?
Right.
So Zoom started 2020 with 10 million customers, not to be sniffed at. But by April, it had 250 million users, right? That is you know, that is an explosive change. And so you're going to see similar things in terms of the death knell of traditional finance, of physical finance, of cash, of bank branches, right? If you can split money, send money, save and invest money, borrow money and pay it back digitally right now, you'll do that. And, you know, if it saves you a trip out in a mask to a bank branch, you'll figure out how to do that. So apps are getting downloaded, digital transformation of finance is happening very quickly. On the other side, you've got this picture of the fintech ecosystem. The money will simply dry up. So you talked about the explosive amount of money flowing into fintech. That has stopped, essentially. There's almost no money for new fintech ventures. And so there's going to be a period of consolidation. There's going to be a period of M&A activity. And leading that charge, you're going to be the traditional financial institutions. So they'll get the last laugh, actually. Would be the people that we said were going to get disrupted. And I've got the last chapter of my book is called The Empire Strikes Back, where we basically said, a negative market will drive a period of consolidation, and it'll be the banks that lead the charge on that. I think, to the answer to the question about where do we need innovation, to me, the two things all have to do with this crisis. We're seeing now the fact that the people that we rely on, the heroes, the frontline workers, are the people who are getting the shortest shrift. They're badly paid. And we're seeing the challenges of the gig economy. And that's why, so many people are applying for unemployment. So many people are crowding around food banks. There's a frailty to our system. And we're going to need fintech to solve for some of those problems. The two areas, one, I think lending, using credit to smooth over the peaks and troughs of income volatility that a gig economy burdens people with. And related to that, getting paid in real time, having money when you do the job, I think is an area, and there's still a lot of figuring out needs to be done, and how we use technology to better evaluate people's creditworthiness, and how we make it happen, who pays for people to get paid in real time. But those are the two things that I think this crisis are going to throw a spotlight on.
Yeah, and I think your book is a great read. It's just an entertaining read for anybody that's interested in this in this world of fintech, or interested in the way that money works and is going to work going forward, because the story of money just keeps evolving, and this crisis has really brought a lot of the needs front and center and a lot of the fragility of the system front and center. So Dan, Simon, a real pleasure speaking with you folks. Get a copy of The Money Hackers wherever you get books, but if your small business bookstore opens soon, maybe get it from them, because a lot of these e-commerce companies are doing well. And we'll come back on camera here. Dan, it was a real pleasure speaking with you, and I wish you best of luck with the book and in continued health and happiness for you and your family.
Oh, thank you. Same to you, Caleb.
And thank you folks for joining us, and we'll have this on video replay if you ever want to share it or watch it again or send it to some friends. I'm Caleb Silver, the editor-in-chief of Investopedia. Dan Simon, CEO of Vested and the author of The Money Hackers. Thanks so much for joining us. See you, Dan.
That came out well. Thank you very much, sir. Good to see you. Always pleasure.